Let's get onto that in a second, because I want to understand, so what have been the restrictions this year? Obviously, COVID's impacted everyone. So we've heard stories out of South Africa, which you're in. I know you're in the northern part of South Africa, and Botswana. So what's the impact been on you and output?
So we've been impacted in a number of ways. First off was as the COVID started to evolve and the situation globally started to evolve, we started to expand our inventory of critical stores. So our working capital consumption went up. That was more of a precautionary measure, particularly with Botswana being a landlocked country. And gold mining, you need cyanide, you need oxygen, you need grinding media, all sorts of things that you need to come in on a regular basis. And of course, we manage that as compact a supply chain and minimize our working capital. But we took the advantage of higher gold prices and more cash flowing through the coffers to increase our stores and sort of build up that buffer. No major supply chain disruptions, a little bit worried in March, April, but nothing serious hit us. Second was outright shutdown, which we did have in Botswana and South Africa for a while. We lost in total about a month, plus or minus, in either in both jurisdictions. And that was in both places we were deemed a critical industry and were able to go on operating. But we were, as that evolved and was figured out and the regulations were determined and protocols, we did have a period of shutdown. So that hit our Q2, and we've discussed that in our disclosures. And now, looking at us here in September, Botswana hasn't really been heavily impacted. South Africa has had a large number of cases, and the situation continues to evolve there. We are operating with strict protocols in place, which as an underground miner has affected our ability and throughput underground, reduces our head count, and trying to maintain social distancing in those compact spaces is a challenge. So in Botswana, it's been it continues to be an impact for sure, but it's limited. We're able to get most of our throughput on the mining side, a little bit reduced. And on the plant side and processing, we don't have so much of an issue. That's not the bottleneck. It's definitely on the mining side. And at Galaxy, which is South Africa, a little bit more of an impact there. But again, no real bottleneck on the processing side. We have excess capacity there. So we are getting slowed down a bit on the mining. The ore is not going anywhere. The gold's still in the ground. Of course, we'd like to get it faster, not slower. But as of now, we're just following the protocols as strictly as we can and watching the situation evolve. And I mean, we don't have any specific dates, but I'm optimistic by certainly by 2021, we'd be back at normal staffing levels.
Okay, so just to understand, so how much ore is sitting at surface for processing in South Africa?
No, we have no bottleneck there. So we have no issue with the processing. It's really the amount of people that we can have underground at once and how our throughput on the side. So we don't have any buildup of the ROM pad or anything like that. It's really just trying to maximize what we can get out on the mining side.
So what percentage of your staff are working underground at the moment?
So we're down to it in certain parts, 2 people where we otherwise would have 4 or 6. So it is impacting us. We can mitigate that by running more shifts, doing other things to automate the process. And so it's not a linear reduction. We don't have 1/3 or 1/2 the throughput, but it's affecting our throughput. So we saw it in our Q2 numbers, discussed it a little bit. It's in our Q3, so the production is going up because Galaxy is starting to contribute more, and Mupani, we didn't lose that whole month like we did in Q2, but it is impacting us and will continue to impact us throughout the year. But we'd expect to lose sort of like 15 or 20% of our production at the margin, which we can't really get it all. At Mupani, we can get it back and have a bit of a lift in 2021. At Galaxy, no, it's just time shifted out. So it's that's a little bit of a deeper bite. But as I said, with these gold prices, we're still self-funding. We're still generating free cash flow.
Right.
And we're doing our best to operate within the protocols.
So what's 15 or 20% production as a percentage of your margin?
So in our normal course, we'd be operating. Mupani would be either side of 35,000 ounces this year. So you can take 15% off that. I think we might do a little bit better than minus 15%. It might be closer to 10% when all's said and done, but we'll see. And that would have, if it was gold prices of 2018, that would have been very painful for us. But now, instead of having an all-in operating cost that would have been more like $10.50, will come out something like $11.50 at Mupani. So yeah, it does hit our. Of course, we have reduced staffing, and there's less mining activity. We pay by the meter, pay by the ton. So there are variable costs that have come down, but it does impact our total cost and does impact our margin. But now you're talking about instead of $800 an ounce or $900 an ounce margin, it's $700 or $750 an ounce. So negative impact, no question. And at Mupani, hopefully we can get that back with in 2021 with a little bit of an accelerated production schedule.
Okay, I'm guessing the number I'm trying to get at is, how much less free cash flow will you have from operations before debt is paid?
Yeah. So I mean, you could basically take off if you take off 3,000 or 4,000 ounces from Mupani, and say we would have had $750 or $800 an ounce margin on that. There you go. So you're talking about on the order of $3 million of operating margin that we would have had. So the numbers are going to look amazing at the end of the year. They would have been amazinger if we hadn't had COVID, but perhaps gold price wouldn't have moved up as fast either.
Okay, well, so let's talk about phase 2 then, because you're not quite clear on timing yet, because you've got to follow guidelines. But your expectation is Q1?
So phase 1 was to complete our previous guidance pre-COVID was August or September, and the where that flows from is when we hit Galaxy's we call it a constellation of 21 ore bodies, and for our phase 1 production, most of it was the contribution was from the Galaxy ore body, hence the name Galaxy. And as we developed into Galaxy, we were getting, call it incidental production from the development work, but also mining from another ore body called Princeton, and also some production from old mineral sands, which we're reprocessing through the plant that we built there. So getting production along the way, month by month, but not in that full swing, 24,000 ounces of production a year, primarily coming from Galaxy till we get into that ore body. So that September timeframe has now been shifted to January. So we pushed everything out 4 months, and that was kind of like the month that we lost, plus delays along the way, giving ourselves a little bit more buffer for other issues that might pop up around COVID. And now we're guiding people to January. So for 2021, for basically that year, we're going to be in full phase 1 production at Galaxy, huge contributing sort of on the order of 23,000 net ounces of production to Galane. Our original plan was, going back 3 years ago, was that, assuming that the market would be like it was, where we couldn't really access capital on anything but absolutely horrific terms, super dilutive and very expensive debt if you could get it, we had planned to just pay down debt out of cash flow, accumulate cash, and fund our transition to phase 2, which we'd already built the plant to accommodate phase 2. So it was really basically doubling mining capacity and everything that went with that. But because of the much higher gold prices, we can basically fund it internally, no financing, no debt, and do it under our own steam in 2021. So we'll start work on phase 2 basically as soon as we're have completed phase 1. So we would expect to get that phase 2 kind of production levels by as soon as 2023.